I'm Cynthia Rowland, and this is episode 37 of EO Radio Show. This episode focuses on the key questions to ask when a founder has that fire in the belly and is ready to create a new charity as an independent charitable entity. I'll outline the key steps and the timeline for launching the charity as a nonprofit corporation. And I'll walk listeners through the initial decisions that should be made before setting the process in motion. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. My goal in this episode is to give listeners a summary of the key steps that need to be taken and an expected timeline, as well as a brief outline of administrative considerations and estimated costs to create a new charitable organization. I'm going to focus on charitable corporations, not charitable trusts, since charitable trusts are much less frequently used and have a number of nuances to consider. Also, nonprofit corporations that are not charitable, such as advocacy organizations, also known as C4 organizations, have a similar timeline and process, but not quite as many hoops to jump through. Whether the founders want to take a do-it-yourself approach or hire an experienced lawyer or accountant to help with the project will depend on the resources available to the founders. Today's episode is intended as a primer for those who haven't been through the process of forming a nonprofit before and is a general guide to get you started. All these remarks also assume that the founder has the startup contributions needed to successfully launch the organization either in hand or promised from others. So let's start with the key steps and the timeline. I'll go through those steps in order, and then I'll come back to each of them with a few remarks. Step number 1, form the charitable entity under state law. Step number 2, prepare the governing documents. Step number 3, apply for federal tax-exempt status. Step number 4, initial funding from the founders is contributed. Step number 5, register the corporation with the states where it will be operating. And step number 6, apply for tax-exempt status in those relevant states. So the overall timeline really depends on a lot of different things. So rather than giving you an estimated time for the total, let's go back and talk about each of these 6 steps and how long they typically take. So step number 1, form the charitable entity. Creating a nonprofit corporation under state law depends in large part on the turnaround time from the state agency. For the most part, nonprofit corporation articles of incorporation, or in some states referred to as the certificate of incorporation, follows a fairly standard framework. While it's always possible to customize the articles of incorporation, once that has been decided, that is the exact form of the articles of incorporation, I would allow for a minimum of 2 weeks turnaround time from the Secretary of State's office. Sometimes it takes more, particularly if the certificate is rejected for some procedural purpose. So that's step 1, form the charitable entity, and the timeline depends on the state turnaround time once you've decided on the exact language. Step number 2, prepare the governing documents. Now, the articles of incorporation are the highest priority governing document, but they don't generally go into the details of succession planning and policies and procedures for the nonprofit corporation. Nonprofit bylaws are typically more customized than your standard for-profit corporation, and the main issue there is usually the succession planning, how successor directors will be selected, how officers are selected, and so forth. So preparing the governing documents can take quite a while. If it's a small board and a clear succession plan, maybe it's just a few weeks to get the governing documents created. And often we're working on those governing documents while we're waiting for the articles of incorporation to come back from the Secretary of State. So we've got the governing documents decided and the initial board has signed off. So then we're ready for step 3, which is to apply for federal tax-exempt status. Now, the IRS application and the timing for that depends on whether the organization is small and can use the IRS Form 1023-EZ, or whether it's over that threshold and has sufficient revenue anticipated that a full-blown IRS Form 1023 is required. The prep time for that really depends on the homework that's already been done by the founders. So I would say it's at least 2 to 4 weeks of prep time for the IRS Form 1023, assuming that all of the details are already determined. And I'll get to those initial details in a minute. So that's step number 3, apply for federal tax exempt status. Step number 4, once that application for exempt status has been filed, the organization can think about opening the bank account and taking in the initial funding. Some founding funders will not want to make a contribution to the organization until after the IRS determination letter has come back from the IRS. Others will be comfortable with it. It really depends on your circumstances. But that's step 4, get the money into the bank account and begin operations. In many cases, we're not moving on to that step, though, until the IRS determination letter has been returned. The IRS is taking, right now, as I record this in the spring of 2023, the timeline is highly variable for standard organizations without any red flags or issues. The applications are generally coming back within 1 to 3 months from the date of filing. Complicated organizations or organizations where additional questions are asked by the IRS can take 6 months or more. So this is the biggest variable time in our timeline. That is from the time that the IRS application has been filed until that IRS determination letter has been returned. And you can move forward with soliciting charitable contributions for people other than the founders. So that's step 4, getting the initial funding in the door, either from the founders right after the application is filed or from the public after the IRS determination letter is in hand. Step number 5, register with the states where the organization is operating. This depends on how many states the organization is operating in, and whether you're operating in other states is a complicated legal question. So I'm not going to go into the details there, but just note for planning purposes that once charitable contributions have been received, if your organization is operating in any states where separate registration is required with the Attorney General's office, that typically needs to happen within 30 days of receipt of the first contributions by the organization. So that's step number 5, register with the states. The actual registration process doesn't take a terribly long amount of time because it's typically just a few questions and additional things on top of sending a copy of the IRS Form 1023 or the determination letter. So it's not a complicated or time-consuming process in itself, but it does take some time. And if you'll be soliciting in many states, you'll want to be registered before you start soliciting for contributions from the public. Step number 6, apply for tax-exempt status in the relevant states. Now, tax exemption in the states is different than registration with the supervising authority. In California, it's the Registry of Charitable Trusts. In other states, it's Attorney General's offices, and the specific registration varies. But anyway, tax-exempt status is a different application, and that needs to be considered in the states where the organization will be doing business. Not all states have a corporate income tax, but for those that do, the organization needs to obtain its tax-exempt status in those states. So that covers the key steps and the timeline. So now let's talk about the things that will make this timeline shorter. There's some initial information that I like to see from founders before I even begin walking down the timeline. If I have all this information in hand, I can move as quickly as possible from the professional's perspective, without waiting for the founders or the key decision makers to get back to me with their decisions. So here's the list of initial information that I like to see before I start. First, I like to see that you have a business plan with the sources and uses of resources clearly delineated. Where is the funding going to come from, and how is it intended to be used? A business plan for a nonprofit is just as important as a business plan for a for-profit organization. But I like to see that a founder has a business plan. Second, I like to know whether the organization will qualify as a public charity or whether it will be a private foundation. That, again, is a technical legal question, but it's really important to have that sorted out before starting down the path. The third thing I like to see is a succinct description of the initial mission and vision of the organization and the charitable programs it will operate. These are really essential for the IRS Form 1023. I like to see that the founders can confirm that it actually qualifies as an exempt organization. That's a combination of an analysis by the founders and their lawyer in some cases. But we do want to know before starting down the path that this organization does qualify as an exempt organization. The next item I like to see in this set of initial information provided is that the name and physical location or locations for the organization is decided. We need those addresses for a number of purposes, and it's really important to know that the organization knows where it will be so that we can decide the state registrations that are required. Next, I like to know that the founders have a vision for governance succession planning, including names of the individuals or entities that will designate directors, whether the directors will elect directors, whether there will be a nominating committee, basically whatever features of the governance succession plan they have in mind. I like to also know that the founders have the physical and electronic contact information for each of the key decision makers. Next, I like to see an estimated financial budget for the first fiscal year and 2 subsequent tax years. The budget, nobody's going to hold the organization to this budget. It's not something that the IRS is going to come back and say, you didn't meet your budget, or, you overspent, or, you raised more money than you said. It is more important, really, to understand how the organization is putting the pieces of its vision and business plan together economically. Now, one footnote, if your financial budget shows that the organization will be raising funds and operating at a level of less than $50,000 a year, then the organization is entitled to file that easier application, the Form 1023. And if the estimated financial budget for the startup period is more than $50,000, you're going to have to do the full-blown 1023. But that's the only piece of the budget that is really a pivotal decision point for the application and the startup process. But even with that set aside, we still like to see how is the money going to be spent? What are the salaries? Who's going to be paid a salary? How much are the operating costs going to be? Just a number of budget items that are typical for a startup organization. The founders should be able to put that together before they start walking down this path. And then some administrative details. We like to know what the fiscal year is. For many organizations, it's just a calendar year. That's often the easiest. But for academic institutions and for other organizations, sometimes a June 30 fiscal year end is more useful. And that the fiscal year is really important to the startup paperwork because you're going to make some representations about what the fiscal year is. And if you need to change it later, that's a hassle. Another key decision point is zeroing in on the best state for incorporation. Sometimes it's Delaware. That's quite common for a number of reasons. But in other instances, you want to choose the state of incorporation where the organization will actually be operating. So that's an important detail to pin down at the outset. Again, if you have to change it later, that's a big hassle. It's not easy. Next, I like to know who the person is that will be responsible for the day-to-day administration and financial management. These are really important roles. And if the founding board or the founding group of people doesn't include someone who's going to be taking care of those details, then a little more thinking needs to be done because we really need a contact person that can address the day-to-day details of starting up and running the organization. And we also need to have a person who's competent to manage the finances of the organization. So in a very big nutshell, I was going to say in a nutshell, but this is not a small nutshell. Those are the things that I like to know before I start down this path for a new organization, for a founder that wants to start a new charity. The next step that usually comes up in this founding conversation or this initial conversation with the founder is, okay, so what's this going to cost me? Well, it really depends on whether the organization has the financial resources or the time resources to create the organization without the assistance of professional help. And while I'm not going to give you an actual budget, I'll give you the bullet points of how the money is usually spent in that formation period. First, as I mentioned, formation documents need to be created, and there's corporate resolutions and a lot of legal paperwork to establish a corporation. So that's a set of work where there are abundant forms on the internet. Whether those are suitable and appropriate for your organization really depends on what you're doing. Sometimes it is easy to copy the formation documents for a similar organization. that the founder knows about. Other times that other organizations' succession planning and formation documents are completely inappropriate. So that's going to be a factor in how much either time or money it's going to take to create those formation documents. Then there's the IRS and state filings. There are a number of tax forms that need to be filed. The 1023, as I mentioned, which is the exemption application. There's also the application for the employer identification number. If there will be employees, there will be payroll forms to file. The budget you have for filling out those applications will depend on a lot of the answers to the questions that I've already talked about. And then there's state and federal filing fees. The IRS filing fee depends on whether it's the 1023 Easy or the full 1023. And then there are state filing fees. That one I can give you a kind of a sense. I throw out, you've got to earmark $1,000 for the filing fees. Sometimes it's a little bit less than that, but it does cost money to file for these applications. And then the biggest question is, how much advising is the organization going to need in terms of setting up the initial structure that will work and advising on whether the organization's activities actually meet the standard for a 501c3 tax-exempt organization? And that's the advising that creates the greatest variability in how much it's going to cost to set up a new nonprofit. So those are the things to think about. The best way to minimize those fees is to have the business plan, the budget, and all these questions that I listed so far in this episode. If you have all those things answered at the outset and have educated the founders and the key decision makers on the basics of operating a nonprofit, startup costs are going to be minimized, or at least you'll be able to do the best you can to keep those at a lower end. So as we wrap up, if you'd like more information about the types of nonprofits discussed, that is, public charity definitions versus private foundation, corporate governance documents, succession planning, and so forth, check out the show notes where I'll list the nonprofit basics episodes that describe many of these issues and address those things. Finally, if you are new to the world of nonprofit regulatory compliance, a number of the other episodes may be helpful. We'll link to all of the basic episodes that touch on these topics in the show notes. So that's all for this episode. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Varela, Braun & Martel. If you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.